Hi traders, hope you're doing well. Welcome to my video on the zero lag exponential moving average. In this video, I'm going to show you a simple trading strategy that you can use to capture moves such as this one for almost 600 pips. You can see I have the zero lag moving average already placed here on my chart. It basically displays the green line when the market is moving up or price is above, and a orange line when the market is moving down or price is below. If we just double click, we can have a look at the indicator settings. So the various values, you can choose the time frame to use. So we're just going to use the current time frame. This is the 1 hour pound dollar chart. I prefer the higher chart time frame, so the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be much more reliable. I much prefer to trade smart rather than hard. Less time chart watching. I don't want to scalp a few pips here and there on the 1 minute and 5 minute charts when we capture moves like these for hundreds of pips on the higher chart time frames. Okay, so you can choose the moving average period, price to use, the type of moving average. As I said, this is the exponential moving average, and various other settings such as alerts, so on and so forth. Okay, this is the MetaTrader 4 platform that I'm using. You can use this strategy on any trading platform. You just need to find the zero lag moving average indicator, attach it to your charts, and then you're ready to go. So how do we use this in our trading? Well, what we're going to do is we're going to use it to identify the direction of a trend or to help us. We don't necessarily need, in my opinion, any indicators to see the trend. You just need to be able to do this. Okay, higher lows, that's an uptrend. Okay, simple as that. And if price is above, I mean, some traders will use just this and say, okay, well, when price is above the moving average, we're in an uptrend, or when it's below, we're in a downtrend, which is not necessarily the case, because if you look at the overall picture, I mean, price here is below the moving average, but technically, overall, we're in an uptrend. Okay, it just depends really if you're short-term trading, day trading, swing trading. But for the purpose of this strategy, we're going to look to capture these big moves. As I said, trading smart, not hard. So once we've established the trade direction, the trend direction, we're going to only trade in the direction of the trend. So we know from here we're only taking long or buy trades. We're not going to sell, we're not going to sell on the way up here. So we're just going to buy. But when are we going to buy is the question. So a few ways some traders would use this indicator. They just buy. If I just zoom in for you, when the indicator changes color, they would take that as a buy signal. So for example, it closes down for bearish here, and when it goes bullish, a trader would look to buy. So either here, which would be a bad trade, or here, which would be a decent trade. Okay, the thing is, if you trade every time it changes color, whilst you will get some good timed entries, like in this move up here, okay, change color, change color, change color, only trading long in the direction of the trend, there will be instances in consolidating or ranging markets when you can just get chopped in and out by buying and selling. Like here, for example, if you bought and sold every time it changed color, you can just get whipsawed in and out of the market. So what I prefer to do is I like to just zoom out, and I'll just wait for a pullback. So once I've seen this price run up here, I'll mark the resistance level, and then this would be the area. I just wait for price to break through this level here. Okay, so you see then we get the pullback into the trend, and then a continuation. Market still making higher lows, and a nice breakout there above this resistance. And then interestingly, if we wait, this resistance level then becomes support. Okay, so that just emphasizes the importance of this level. Got a nice wedge formation here, breakout to the upside, and this would be a good timed entry into this uptrend. Had we have taken that trade, profit potential almost 400 pips, I would have placed my stop loss just below the low here. Okay, so around 15 to 20 pips, which is a relatively tight stop loss for the 1 hour chart time frame. And then as price continued moving up, I would move the stop loss first to break even, just to lock in the trade. I don't want a winning trade to turn into a losing one. Okay, and just put the stop below the low, below the low, below the low, below the low. As price continues up, just keep moving the stop loss below the low till price turns around and eventually takes us out, or we manually exit once we see the market starting to make lower highs as well. You can of course close part of the position on the web if you want, close a quarter, let the rest run, close half, let the rest run. It's just up to you. I mean, your preferences. What I wouldn't want to do is, say we have a 15 pip stop loss here and then price shoots up here for 30 pips and get excited and exit the trade. Okay, a 2-to-1 risk to reward ratio is not bad after broker fees, but just leaving too much on the table. Okay, and you can of course re-enter. Just bear in mind the more you re-enter, the higher your chances are of getting a trade wrong. And you certainly wouldn't want to enter here near the high. Well, I wouldn't anyway. So on the way up here, this trend as the trend continues, you can see the pullback. It's just the same principle. Pullback, breakout. Okay, pullback, draw your resistance. There's no coincidence. This resistance level, big breakout candle there. Just zoom in. So the first one, big breakout candle. Second one, big breakout candle. That resistance then comes support. Nice bullish hanging man pattern there. Lots of bullish price action for the continuation of the trend. Same thing again. You wait for your pullback. Okay. Pullback, breakout, continuation. And you just want to be careful because you don't want to end up buying too high. Okay. Pullback, big breakout there, but if you just zoom out and look at the overall picture, be careful you're not buying at the high. You want to buy low and sell high. Okay, so ideally you'd want to get in on one of these first entries down here. I mean, some aggressive traders may be, looking at that breakout there, but for me, it's a doable trade simply because we can see the market is making these lower highs here. And it's the 1 hour chart, so there's plenty of data in there. And it's actually, in fact, a nice big breakout candle there. So I think traders were anticipating this move happening. And interestingly, the resistance held up as support and a nice potential entry, even on the breakout of the pullback there. Or you can just wait for the trend to be confirmed and then enter on the next breakout. Either way, with good money management and good discipline, you can capture big trends like this one. Okay, less time chart watching, more time catching big trends. If we look at short examples, so trade in short, you can see price reach a resistance point here. Okay, we did have this trend line going upwards, but then after this was breached, probably in fact take it all the way back to here. Okay, you can see this trend line here acting as support, but then a big breakout down below that. The move price goes below this moving average, which, as I said, is not a necessity. You can see we can do this strategy without that by just, lower highs in a downtrend. So we know the market's downtrending. Do we necessarily need a potentially lagging moving average to tell us that? Personally, I don't think so, but I appreciate everyone's different. Some may use a combination of moving averages just so like when they cross for extra confirmation. At the end of the day, I just feel like you can manually draw a trend line yourself. Okay. So what we've seen is then price came up to this resistance, strong resistance, 1, 2, 3, 4, tested 4 times, also making lower highs as well. Okay, breach of this support line from this uptrend. So once this was breached here, could have waited for a pullback, and well, you can see how strong. Look at this support. So a breakout closing below that support line is a good indication that this is what's going to happen. You can see from that big candle there, no coincidence, the price fell, is below the moving average as well, and this is a great entry into this big trend here. So you're looking at over 700 pips profit. We may have been taken out by a trailing stop down here or here. And there's still hundreds of pips to be made. And talking of stop losses, again, price above a swing high for a short trade, so probably here 20 pips. And then as price drops, what I would do is I move my stop loss to break even just to lock in the trade. Worst case scenario, price turns around, we get taken out for break even. Best case scenario, it continues to fall and we just trail the stop loss above the high, 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 and just ride it as much as possible. Closing part of the position again if you want to. But what we don't want to do is use a 20 pip stop loss, see price drop around here, get excited and exit prematurely. You're just leaving too much on the table. Okay, and by re-entering, you risk entering late. Okay, so missed that entry, there's another opportunity to get this pullback here. Okay, we could always nice M chart formation and a breakout to the downside. See from the big breakout candles here. Traders were anticipating this. Again, market making lower highs. We don't need the magical technical unicorn crystal ball indicators to trade like this. We're just trading what we see, price action trading. Not relying on lagging or repainting signals. Okay, just common sense and good discipline. So don't let negative emotions like fear, anger, greed get in your way. Don't overtrade, don't revenge trade, don't get fear of missing out. ending up buying at the high, selling at the low because you're worried you're going to miss out on a specific move. Have a plan and try to stick to it as best possible. You can use a strategy on any trading instruments, so Forex, stocks, commodities, cryptos, indices, etc. So you don't need to force trades on there. There'll always be an instrument and a time frame with a trend, a set potential like this. Okay, when we see consolidation, we probably want to avoid getting whipsawed in and out of a market like this unless you're range trading. Of course, you might want to be actively looking for a scenario like that. Otherwise, we can wait for a breakout, a clear breakout, like you can see. Pretty clear what's happening here. Lower highs, okay? Again, almost the same scenario as we did just before on the other short trade support line. A breach of the support line. Price falls below the moving average. You can wait for a pullback. So get a pullback here. And then we can enter into this trend on the pullback. Okay, there's a few pullbacks there, pullback there, pullback there. Even here, again, you don't want to end up selling too low. Okay, you want to try and get in as early as possible on the moves. If you get it wrong, let's just say you see a potential trend forming and you do enter on a breakout, there's a fake out and price turns around and goes against you. If we exit a trade for 15, 20 pips at a loss, it doesn't really matter when overall, if we just catch one or two big moves like this for 400 plus pips, we can make back those losses and then a lot more on top as well. But again, when we start getting down and around here, you want to be careful not to sell at the low. Especially even if you see a deep pullback, if you're thinking, okay, price has dropped here, let me draw my spot, but then you see a pullback like this, okay, quite a big pullback, and becomes more of a ranging market. Nevertheless, if you did take that trade, worst case scenario, you'd probably be looking at a break even trade. If not, you could have just exit when you see price come back above and stay above this moving average. And again, the higher lows as well could have been a sign to exit. There you go. Hopefully you found some useful ways to use the exponential zero lag moving average. As I said, we're trading with the trends. So when the market's making lower highs like this, we're only going to sell. When it's making higher lows, we're only going to buy. We're going to time our entry on breakouts, okay, and use good money management and good trading discipline. That way I think you can form a solid trading strategy. Make sure you practice on demo. Please like and subscribe if you found anything useful in this video. I appreciate you watching. I hope to catch you on the next one. Take care.